Okay, we've got to talk about a number that is just absolutely shaking up the tech world. OpenAI, the folks behind ChatGPT, just inked a deal that doesn't just break records. It completely rewrites the rulebook for what a startup can even be.
And there it is, $500 billion. Just let that sink in for a second. This isn't just OpenAI's new valuation. This is a number bigger than the entire economy of a lot of countries. So how in the world is that even possible? We're going to have to look a little closer.
And yeah, with that number, OpenAI is now officially the world's most valuable startup. This move takes them way beyond just being a leader in AI. It's setting a totally new benchmark for what's possible in the private tech space.
So how does a company get to a valuation like this? To really get it, we have to go past the big, splashy headline and dig into the actual mechanics of the deal itself.
What's really fascinating here is how they set this valuation. OpenAI didn't actually sell new shares to raise money for the company. Nope. Instead, this was what they call a secondary transaction. All that really means is the company opened a window for its own employees and some early investors to sell their existing shares to other people who wanted in.
And oh boy, did they sell. A jaw-dropping $6.6 billion worth of stock was sold by OpenAI's current and former employees. For the people who actually built this company, this wasn't just some number on paper anymore. It was a truly life-changing payday. But here's the thing. This wasn't just some generous payday. Structuring the deal like this was a really calculated, strategic move by OpenAI. And it's all about protecting their most valuable asset, their people, their talent. Which brings us to the big question, right? Why a secondary transaction? Why let employees sell their shares instead of just raising more money for the company? Well, the answer tells you a whole lot about what's going on in the AI industry right now. It pretty much comes down to one thing: the war for talent. First off, a deal like this provides liquidity. It turns that paper wealth into real, actual cash for employees. Second, of course, it's a massive reward for all their hard work. But maybe most importantly, it's a defensive move to keep their top minds from getting poached by competitors. And this quote really just nails it. The AI space is an absolute pressure cooker right now. Every single major tech company is trying to hire away the best people. So by letting their employees cash in on some of their success now, OpenAI is building a super powerful financial reason for them to stick around.
But, a deal like this doesn't just happen in a vacuum. Let's zoom out for a second and look at the bigger market forces that really created the conditions for a $500 billion valuation in the first place. You can almost think of it like two powerful currents that are converging. On one side, you have this immense investor demand. Everyone wants a piece of the hottest AI companies. And then on the other side, you've got that fierce talent war we were just talking about, with rivals constantly trying to steal each other's employees. So, when you combine that massive appetite from investors with the intense pressure to keep your best people happy and in their seats, well, you get a perfect storm. This is the exact environment that makes a deal like this not just possible, but in some ways, almost necessary.
Now, even though this specific deal was about employees cashing out, the crazy high valuation it sets has huge, huge implications for OpenAI's future, and especially for its ability to raise money for its really ambitious plans. And trust me, these ambitions are incredibly expensive. We're talking about a constant race to develop the next groundbreaking AI, which means you have to invest in truly massive supercomputing infrastructure. To keep up that blistering pace of innovation, you need seriously deep pockets. And a sky-high valuation makes raising that kind of cash much, much easier. So let's kind of connect all the dots here. The headlines might be all about the employees getting rich, but the real story, the deeper story, is about securing the future. This move locks in the talent that OpenAI absolutely needs to build whatever's next, and at the same time, that massive valuation gives them the firepower they need to fund it. It's a strategy that's just as much about tomorrow as it is about today.
And so that leaves us with the big question, doesn't it? With its talent secured and a valuation that rivals entire nations, the pressure is on. The whole world is watching. What does a $500 billion AI company do next? Thanks for tuning in.